Now there are simple specific terms that ISA 315 talks about when it comes to risk assessment procedures. The number one is scalability. Now over the past few years, what has happened is that, and concerns have been raised by IAASB, that auditors are performing fewer and less procedures for smaller clients. So even though the complexity of those smaller clients would be very high, they are considering these are smaller clients and we are unregulated and etc. So we will proceed or perform only less amount of procedures. So ISA 315 includes a concept of scalability to remind the auditors that not just the size, so not just whether the entity is small or not, but as well the complexity relating to the smaller entity should also be considered. So to give you an example, let us say, we are auditing a larger entity. So if we are auditing a larger entity, the auditor might perceive that the size of the entity is so huge. So there could be complexity, but not necessarily true. Because even though the size of the entity is huge, they could have high amount of or increased amount of rigorous controls present, which will reduce the risk of an auditor compared to a smaller entity. Where the smaller entity, the controls might not be proper, there will be management integrity will be very bad, the accounting treatment of certain transactions will not be good, etc. So, but in larger entities, the controls are very specific and the controls are really, strong, which will prevent risk of material misstatement, which means it will reduce the work of the auditor. And certain only ad hoc systems or any certain items which you need to audit, we just need to focus on. Similarly, a smaller organization, when you compare to this larger organization, smaller organization, the size might be very less, but they might not have access to sophisticated control systems. So the auditor could face challenges when assessing the risk of material misstatement. Why? Because maybe in smaller entities, there is no accountant at all. He might have done so many mistakes, he might not know how to prepare the financial statement, and hence definitely there will be certain mistakes in the financial statement. To give you an example, when I was auditing, when I was in EY, I was taking care of the Middle East region, and in Middle East region, specifically in Dubai, UAE, the clients are very small clients. So those clients, maybe they are startup or they have just incorporated into a company and they have not hired an accountant, or one accountant will be doing the accounting of multiple entities, because of which there are a lot of errors we could identify. There is no control and all because it's considered a small entity. But still, auditor have to be diligent. He just not should look at, okay, what, the entity is small, so we don't need to bother much. The complexity in relation to the controls, management integrity, thinking of fraud risk also should be considered. So the auditor, what scalability talks about is just that don't just look at the size, but as well as complexity, and exercise professional judgment and be professional skeptical as well when you are identifying the risk of material misstatement. This is what scalability talks about. The other term is called as standing back. Throughout ISA, you will find terms iterative and responsive. These are used deliberately to reinforce that the auditor's identification and assessment of risk of material misstatement to be actively considered at all stages of process. Like throughout the stages of the audit process, you are required to identify and assess the risk of material misstatement so that you will be able to assess any changes or development and make sure you can react to the new information. So what does the English term standing back mean? It's like take a step back and assess the situation and react. Similarly, an auditor, what he will do, he will assess the risk of material misstatement only during a planning stage. And what he will do, he will forget about it. No. Even when he is performing control testing or when he is doing substantive procedures, he should still review constantly the risk with respect to controls and with respect to the client, etc. So that if there are any changes, he can react, he can stand back for a minute and react accordingly. So standing back means auditor will pause and reflect and respond if any information emerges at any point during the process of audit. So don't take a hurried decision that, okay, you know what, this is a risk or this is not a risk. Step back for 5 minutes and, identify or gather more information about this particular issue and react accordingly. And one more thing that I would like to talk about is additional information. In AAA exams, there could be situations maybe given in the scenario, or there could be situations which is not given in the scenario. So you would be asked to identify the risk, but not enough information is given with respect to a specific risk. But you need more information. What do? If you need more information, when you are auditing, what do? You ask the client. Similarly, if you need more information, when you're writing the exam, you will be asking the client. You need to write the information that is required when you are answering your paper. You need to be very specific about what is the information you need and also mention why you need. So what is the information you need and why you need? You need to be very specific and mention in your answer that this is the information that is required and this is the reason why we need it. And definitely professional marks will be given to you if you are quoting that there are no additional information given with respect to this particular situation and we need this information because we need to assess this particular point with respect to the risk. You don't need to speculate too much about the detail and say what could go wrong, etc. If you don't have enough information, you just, ask it. That's it. There could be gaps and say why you need that, fill that gap and why is the information that is